Joining us this afternoon, Richard Fisher, former Dallas Fed president and Jefferies senior advisor. Richard, great to see you again. Thanks for joining us today.
Yeah, thank you, Carl. What's up?
The thing that got a lot of attention in Powell's remarks was this notion that equities are, quote, fairly highly valued. I was thinking back to when Yellen got some blowback for saying small cap biotech shares were expensive back in the day. Did this line strike you as interesting?
I think it's interesting, and I'll tell you why. Because I think it was March 6th of 2009. If you may remember, Carl, the S&P bottomed at 666. And in the ensuing FOMC meeting, I made a comment that we had defeated, it was the Book of Revelation moment, we had defeated the devil of hyper-bearish markets. Well, where did it close this Friday? 6,666. That's a tenfold increase. That's pretty darn good returns for equity investors. By the way, those that complain about the Fed, be careful, I like to say, at the hand that fed you, no pun intended. But these are very strong valuations. And as we all know, Carl, a lot of it's concentrated in a very few number of companies. But
right.
I think he just made an objective statement. I can't find anybody that doesn't feel things are at least richly priced, if not overpriced. So I don't see any controversy in that statement whatsoever.
Right. How about the notion that the Fed is in a challenging situation, giving conflicting signals on both sides of the mandates? There's no risk-free path, as you put it last week, although I'm not sure anyone thinks there is a path that is risk-free.
Every path is risk-ridden, but no, I think he's been very, and he did it again today. It's the same stuff he talked about in his presser and what they said in the press release from the FOMC meeting. There is a downside risk on employment, and there is still some upside risk on inflation. And they're going to have to steer their way through those straits in order to get it right. I do accept the fact that they made a quarter-point cut simply because they're uncertain here, but they felt that would be helpful. There could be more coming. And I didn't find anything remarkable about his speech. And by the way, didn't find anything remarkable at all about Steve Myron's speech either. Very predictable. He laid out his logic. He now has to convince the 18 other people at the table at an FOMC meeting whether or not he should be listened to or not. But I think they're doing the right thing at this juncture. I wouldn't rule out further rate cuts, but I don't think necessarily they have to be momentous. It's a question of how you move at the margin to deal with the risk. And Carl, one of the things I like to track, the National Federation of Independent Business surveys. These are small, medium-sized, not listed companies. We don't talk about them, but they create 80% of all the jobs in America and hold half. And if you look at the recent surveys there, no one's complaining about access to credit. And in fact, their cost for credit has gone down just a little bit on a couple basis points. What they're really concerned about, and this gets to the conversation here, is the availability of labor and whether or not they can continue to afford to retain the workers that they have. And many of them comment on the fact that these immigration policies are making their labor relations difficult and more expensive. So labor really is the issue here. They're not talking about inflation as a major problem yet. They have concerns going forward. We'll see how the tariffs work their way through to small, medium-sized businesses. They're not worried about access to credit. What they are worried about is the labor situation. So we're going to have to monitor that very, very carefully, and that's where jobs are created in America.
Yeah. The thing that struck me about NFIB, since you brought it up, were the percentage of firms net who are planning to raise average selling prices that fell to 21. You got to go back to October of last year to get a number that low. That's
correct. So let's hope that obtains. And we're just going to have to see how, again, as Powell and others have mentioned, heard it on your previous shows today, how long it takes for that to actually work its way into the system, how companies respond, and whether they eat it or pass it on to protect their margins. We don't know yet. And we know that it's a tax. We just don't know how it's going to affect the consumer. And that's what we should be monitoring.